The broadcast is now starting. All attendees are in listen-only mode.
Hey, good morning, everyone. Sorry about the little bit of delay here. Got a little late start to this morning's webinar, but we'll go ahead and get started here. Appreciate everyone joining us this morning. We'll be discussing some of Lincoln Financial Group's plans they have available out there in the field. They got some great options in the annuity market, some great programs that they offer through their company, and they're a very high-rated carrier, A+ rated, so a very strong company in the marketplace, and we look forward to going through some of their better programs out there that are available in the field. And we at IAMS, we still offer our referred producer program. You can refer agents to us based on agents you are aware of or people you have interest in referring. We'd be glad to get them started with us, and we do pay a $50 finder's fee when they get contracted. We also will pay you a 20 basis point override on their business based on their annuity premium. So if you refer someone that does $1 million with us, you'll get a $2,000 payment out to you based on that referral. We do pay these on a quarterly basis, really a strong combination out there at this time. We also have our marketing reimbursement. Reimburse $100 for every $100,000 of annuity premium. A great way for you to build up a side account you can use for marketing. I know we have a lot of agents out there that we send some very sizable checks out to, and a great chance to keep things going on that end. We also have our new producer builder bonuses. We do have the 3 tiers you can qualify for. We've got some great options available on that side, and you can get yourself a cash bonus. You can look at our website development team. You can do the Social Security mailing system. You got a couple different seminar systems you can choose from. Really a great package. And we also have that Ritz-Carlton program available. Again, this is Matt Tour. I'm with Insurance Agency Marketing. I've been here for a number of years, and I'm in the marketing department. We do a lot of business on the annuity side and the life side. If you do have questions along the way, you're more than welcome to get those typed in. I'd be glad to get those answered for you. We also have Craig Geiger will be joining us here shortly. He's a home office marketing specialist at Lincoln Financial Group, and we'll be going over to him here in the next 5-6 minutes, and then he will go over some specifics based on what Lincoln Financial has to offer out there. So if you do have questions along the way, be sure to get those asked. We'll be glad to get those taken care of for you. And we'll go ahead and continue on the way here. We also have a great back office support team. We've got a great new business team. They'll help you out with new business applications. If you have questions on any items during the process of getting your policy issued, you'll have a specialist in our office which will be assigned to your policy for your client, and it's a great way to consistently get updates on your pending business. I know with the suitability requirements now, all the requirements out there in the field, it's a much more difficult now than it was even 2 years ago to get business through the channels, as they say, and it's definitely a effort that has to happen to get all that taken care of. So we definitely help you out with that. We've got some great on staff personnel that can help you out with that process. We've got, of course, all the forms you need to get started. We have our marketing assistants, great group of people that can help you out with any quotes you may need, help you with any questions based on specific casework, any questions on specific products. We'll be glad to go over that with you and get all that taken care of for you. So great group of experts here in the office, and a great chance to build your business moving forward. We've got a great creative team. I know they've been with us for a while now. We've got some great options for social media marketing. We've got some great design work we can do based on your company logo. Maybe you want to change the way things look on your logo, or maybe redesign your business card. We'd be glad to help you out with that. We also have a lot of other information we can help you out with regarding mailings, postcards, newsletters, handouts, flyers, whatever you may want to need help on. We've got a great staff on that creative department that can help you out with that material. And we also have some great digital help we can do based on website development, email campaigns, digital marketing based on social media. We've been glad to help you out with all those features. Great team of individuals here that can help you out with that side of it. We've got our website, www.imsinc.com. It's available 24/7. You can download forms. You can get current interest rates. Maybe you want to do some calculations for income purposes. We have an income calculator on there. You can do long-term care quotes, term insurance quotes, life insurance quotes. All that is available right there on the system. So really a good place to go to access that information. We got a great client software program you can utilize. It's called the Retirement Analyzer. I know Marcus Solar in our office is a specialist with this, and it's a great system you can utilize. Pull off some great information, pie charts, bar graphs, gives you some great information based on clients' future needs for income, what kind of money they need to save now to meet their future needs based on income needs. You can plug in some different programs based on premature death, clients looking at turbulent economic times, nursing home stays. I mean, you can throw in a lot of different curveballs on there, and it's going to crank out some really valuable information that you can utilize based on that. We also have a great team on the wealth management side. I know Charles and Michael have been doing this for about 2 years now. We've got a great system we put together for this, and if that's something you have some interest in looking at, I'm going to launch a quick whole poll here regarding the wealth management side. So if you have interest in maybe getting involved with the wealth management side of the business, just check off yes on this poll I just shot out to you. No, just check off no. I know we've got a good wide range of programs you can choose from for clients based on their investment needs. We've got some great platforms to choose from. We've got a opportunity to help you out with that testing if you need some help taking a Series 65 or maybe taking a Series 6 or 7. We can help you out with that side of it. Really some great information you can utilize based on those needs. But we do have a great staff on that side. If it's something you have some interest in, just check off yes on the poll I just launched. I've been glad to get you going on that end. I know it's always good to have more items you can offer your clients. You hate to refer clients to other individuals that may take that client and run with them. You don't want to see that happen. You obviously want to take care of as many of your clients' needs as possible and be able to take care of their whole gamut of programs they'll need. But that's something we have available through IMS now, our wealth management side. I know we've got a big meeting coming up in June, and if you want to take a look at attending that, we've been glad to have you in. It's going to be here in Omaha during the College World Series. Should be a great time had by all. And if it's something you have some interest in coming out to, definitely give Charles or Michael a phone call on that side. I'm going to go ahead and close that poll here. Go to the next slide here. We also do a number of academies throughout the year, between the wealth management side and the insurance side. I know we have a Life Annuity Academy coming up in June. Actually, not in June, but in May. It's May the 8th through the 10th. We're finalizing the attendees on that one. If that's something you have some interest in coming out to, it's a great chance to pick up some great sales ideas, some other information based on what's being offered in the market right now. We go over strategies for indexed annuities. We go over a lot of other information that we'll be discussing during the 2-day meeting. And if that's something you have some interest in, definitely check off yes. I know that we'll be finalizing that list probably the next 7 days or so based on the meeting itself. I'll be glad to go over some details with you on that. And if you do have any questions on that, you can give me a call. I'll be glad to go over any information you may need on the meeting itself. They take care of your flight. They pay you back for mileage if you drive in. You get the room and boards all taken care of, the meetings themselves. It's usually from like a Wednesday evening through a Friday morning. And typically it's going to be in Des Moines or Iowa, or Des Moines or Omaha, actually, based on the location of these meetings. And then those we get those about 3 times a year, so great information to look forward to on that end. I'm going to go ahead and close this up here shortly and go ahead and go from there. Let me go ahead and close that one there. And go to the next slide here. We also offer we do a trip about every 18 months now. It's our program we do. It's our marketing summit, and qualification for this Naples trip runs January 1st, 2018 through June 30th, 2019. So we're coming up on the end of the qualification for this. I know we've got a number of agents have qualified for the trip already. I'm sure we'll fill a number of more spots here between now and June. And it's going to be to the Ritz-Carlton there in Naples, Florida. Should be a fantastic meeting we're holding there in Naples, and it should be a good opportunity to meet some other high-producing agents, really pick up some valuable sales information, some great details we'll be reviewing during that meeting itself. The meeting itself is going to be August the 25th through 29th, and should be a great time we're going to have down there in Florida. So love to have as many of you down there as possible and keep you going on that end. But again, we do have Craig Geiger be joining us here, and I'm going to go ahead and switch the presentation over to Craig. He's going to go over his information here. So good morning, Craig. We're glad to have you on today.
Thanks, Matt. Appreciate it, and appreciate the opportunity to speak with your agents today.
Oh, definitely. And we got a good group on this morning, so should be a good chance to go over some of the finer details on some of the Lincoln financial programs you guys have available.
Absolutely, and I figure we'll just dive right in.
Yep, might as well. There is no way.
I think what Lincoln's really trying to do is we're really trying to have a complete portfolio, not only for accumulation but for income. But the thing we're going to focus on today specifically, and I'll definitely give you guys a quick overview of kind of where Lincoln fits across the board. But let's focus on what I know everybody wanted to jump on the call today is really to talk about maximizing non-qualified assets. And I4Life is a rider that Lincoln has that no one else has, and that's actually been a income rider that's actually been around since 2000. It's been on the variable annuity side for all of those years, and really only over the last 2 years or so is it now become available on the fixed index annuity side. And it's a powerful tool because it really does put you in a position with non-qualified money. So when I talk about non-qualified money, I'm talking about old non-qualified annuities with gain. That could be cash. That could be cash value life insurance. What it's going to be is it's really going to be where if you look at most deferred annuities, and when I say most, it's almost all the deferred annuities. If you take income off a deferred annuity, any income that's going to come out of that, whether you're taking systematic withdrawals or you're going to utilize some type of an income rider, it's going to come out last in, first out, or what's called LIFO. So it's going to come out the most tax inefficient way possible. And really what I4Life is, in a nutshell, is it's a way for you to create more tax efficient income because the income's going to come out with an exclusion ratio like it does on an immediate annuity. The only difference is it's going to be on an indexed annuity. So you're going to get the best of both worlds. You're still going to get a deferred annuity chassis like an index annuity, but you're going to be able to utilize an income rider that's going to provide more tax efficient income for that client. So let's kind of dive right in. So if we look at the last, 10, 15, 20, 30 years, obviously we've seen ups and downs of the market. I know that's nothing nobody doesn't already know, but at the end of the day, we definitely know there's going to be volatility, and there's a lot of clients that are getting that much closer to retirement. And it's all about it. I think a lot of times these people are kind of changing their focus from the growth to really getting to distribution, and they want to get lifetime income that's going to last as long as they do. They also don't want to worry about the big sways with the market. Obviously we know that we've been on a huge run over the last 9 years, but we also recognize whatever comes up can very well come down. And with a lot of clients getting older and older now and getting closer to retirement and wanting income and getting closer to wanting distributions, income is going to be a big vital part of their success, is having income that's going to be there for them in their retirement. So if we look at the time-tested strategies with accumulation tools, when I say accumulation tools, think about Mount Everest. Mount Everest is the highest peak in the world. Thousands of people try to climb Everest. Thousands of people have been successful, but there's been many, many people that have been unsuccessful. In fact, over 80% of the fatalities and injuries with Everest are on the way down, not on the way up. Why do you think that is? It's really focused on the fact that if you think about what the main goal was to get to the top, was to get to the summit. And I think that's where a lot of clients are right now, is they've been growing their assets, been in different asset classes, growing their money as they've been working, but eventually the goal was to get to retirement. And I think in a lot of ways that's the summit. The thing is, that's only one part of the goal. The other part of the goal is to get them down the other side of that mountain without getting hurt. And that's where the distribution phase comes in, and having income systems in place to produce income that they won't outlive. So if you look at accumulation, dollar cost averaging, portfolio diversification, asset allocation, automatic portfolio rebalancing are all important strategies while you're growing the money. But eventually, we're going to get to a point where you, the advisor, now have a challenge. How do I continue to attract new clients? How do I maximize my revenue on my existing book of business? How do I become more of a center of influence in my business, especially as I'm trying to grow this business over the next 10, 15 years? How do I build stronger, healthier long-term relationships with my clients? And how can I help clients that are working longer, saving more, and having to spend less in retirement because, let's say, they don't have a pension, they just have Social Security? How can I help them get into a retirement that's going to give them income that's going to last as long as they do, while also having, asset allocation with their other investments? So if I look at that, and I look at some of the dilemmas that a lot of clients have right now, is how do I maximize their net spendable income? And what I mean by net spendable income, how do I create more net check for that client? It's one thing to have a gross income number. It's another thing to have a net number for the client, that they know that that's the income they're going to have, that's spendable income in retirement. What significant savings that they're interested in protecting their assets to their children or to their family? So when I talk about that, are they interested in doing wealth transfer? Is income not as important as it is getting that income to the next generation? How do I provide support and generate income in a spendthrift type family member or a special needs type situation, like a special needs trust? What if I want to support organizations through monetary charitable support? Of course, how do I help clients that are retiring earlier than expected? When I say earlier than expected, think about clients in your book of business right now that are retiring at 57, 58 years of age, and it's happening all the time. How do we provide income that's going to be the best way for the client to maximize that income, even though they're pre-59 and a half? So we're going to kind of dive into some of those issues today and kind of talk about I4Life and how it can be a great tool to help you with some of those different strategies that clients are going to be looking for. So I4Life, like I said, is called the I4Life Indexed Advantage. It's an exclusive patent pending distribution method that only Lincoln has. It's only available at Lincoln. You cannot get it anywhere else. And the reason for that is, not only do we have a patent on this, but we have 2 private letter rulings with the IRS. And that's what gives us the ability to give you now a distribution tool that can not only guarantee the client's lifetime income with no downside, with downside protection, so no downside risk, but the biggest part of this is I'm getting them tax advantage income with non-qualified money, as well as giving them access and control to the account value, and also being able to put the income on 2 lives, not just one. Now, when I talk about the tax advantage income, if you look at non-qualified money and we look at it, let's say an immediate annuity, what's the one thing we like about the immediate annuity? We love the fact that you get that exclusion ratio, because you're going to get an exclusion ratio on a certain amount of that income. With some of it's going to be return to cost basis, some of it's going to be gain. So you're not getting taxed on the entire thing, which means the client's actually getting more net check, more net spendable income in retirement. But the downside of the immediate annuity a lot of the times is you lose control, you lose flexibility with that asset, and more often than not, I think that's why a lot of people don't do the immediate annuity and they go back over to the deferred annuity side, because they want that flexibility and control. The great thing about this strategy is that you're still using an index annuity, a deferred annuity, so you're still going to have access and control to the account value. The difference is going to be you're going to be getting the benefit of an exclusion ratio with the income coming out. So you're kind of getting the best of both worlds. I'm getting tax efficient income, but I'm still controlling the asset. If we look at a situation here, let's look at Joe, age 70, is looking to take $250,000 to draw income off of, and he wants to see, hey, if I put this into a regular annuity and just took systematic withdrawals, or I used I4Life, what would be the difference on the income? The way this would look is, if you look here on the left side, the I4Life, if all things being equal with the income, each was $13,978 of income. With I4Life, I can see that only $4,410 of that income is actually taxable income. The $9,568 is actually return of cost basis, which is a non-taxable amount. Taking into account about a 28% tax bracket, the client's only paying $1,235 in taxes, which means they're getting a net check of $12,743. If I look at a deferred annuity and I took systematic withdrawals, everything is going to come out LIFO. So all $13,978 is taxable. Again, taking into account a 28% tax bracket, the client's paying a little over $3,900 in taxes, and their net check is just a little over $10,000. So with I4Life, the client's almost getting $2,700 more net spendable income in retirement than they would if they use a deferred annuity and either took systematic withdrawals, or if we're going to utilize an income rider where, again, the income's still going to come out LIFO. So if we look at it, take a look at this in a different format. Let's kind of break things down into three phases. We have the growth phase with a deferred annuity. We have the income phase of the deferred annuity, and then of course we have the legacy. So on the growth side of it, if I look at a typical annuity with a withdrawal benefit, nothing's going to change there. You're still going to get tax deferral on the growth of the contract. So nothing's going to change there. It's absolutely the same. The difference is going to be is when we get to the distribution side, when we start taking income. Again, if you're using a deferred annuity, everything's going to come out last in, first out, which means you're getting the upfront tax burden on all of the income. Now with I4Life, it's going to give you that exclusion ratio again, which means you're going to get a portion of your principal back with some gain, which means what that's really going to do is that's going to ease the tax impact to your client and actually going to get them more net check and more net spendable income in retirement. So a huge advantage to taking income that way versus then coming out LIFO. And on the flip side of that, let's talk about when your clients die with an annuity. There's no step up in basis on death, which means the beneficiaries are going to be on the hook for all the taxes on all the growth. Whereas with I4Life, one of the huge advantages with I4Life is when you think about I4Life, if there's one thing you write down today, just write this down. I4Life is all about tax efficient income and tax efficient wealth transfer. Those are the two main points. If you can remember those two things today and take those takeaways, I think that's very, very important, because we obviously we're talking about the tax efficiency of the income, but what about that wealth transfer thing I just talked about? Well, I4Life actually allows the beneficiaries to manage the taxes and the contract value growth by allowing them to take out, if they want, to take out the cost basis as a lump sum, tax-free, and then be able to stretch out the gain for the remaining payout years that are left on the contract. So it's almost like a FIFO type death benefit with the ability to stretch the gains. So very, very tax-efficient wealth transfer strategy that's available with I4Life. You can't do that with other riders out there. Okay? Like I said, I4Life has been around since 2000. We have over $22 billion in assets in I4Life. We paid over $1.5 billion in income last year alone. And we have over 121,000 customers with I4Life contracts with an annual payment payout percentage of 6.6% of the account value. So again, this has been something that's been around a long time. It's just now available in our world on the index annuity side, which is nice, because the only fee the client's going to pay, because unlike a variable annuity where you're going to have M&E and other sub-account fees and all these other fees, and with the rider, with the index annuity, only fee the client's going to have is the rider fee on I4Life. And that rider currently is only 95 basis points. So if we look at a couple other client solutions that sometimes I think get overlooked is income before age 59. There's a lot of clients that are either get forced into early retirement or take early retirement. The problem with pre-59F income is if you use a deferred annuity, you're going to get stung with a 10% penalty. But if you use I4Life, you can get around the 10% penalty because it's going to come out in systematic periodic income payments. So it's going to satisfy that rule, and therefore you're not going to have the 10% penalty. Think about clients in your book of business that either never got married or got divorced and never got remarried, but they have partners. And the thing is, that could be a boyfriend, girlfriend, that could be same-sex marriage, that could be two brothers that live together, two sisters that live together. It doesn't really matter. What I'm trying to say is, with I4Life, you can do non-spousal joint income. You can't do that with other income riders, because with other income riders, you have to be married. So it's definitely another area where I4Life can be used as a great strategy for particular situations that might come up. Also, we'll talk a little bit more about the trust side. Special needs trusts are very popular with I4Life. And of course, 1035 exchange by beneficiary, which we'll talk about as well. So let's talk about that pre-59 HIF income. Like I said, the reason I4Life can do what it can do is because it offers the client the ability to take income pre-59.5. Because we can do that, because the income comes out like a SPIA. It comes out with an exclusion ratio. Because the income comes out in systematic periodic payments, you don't have to pay that 10% penalty. Secondly, if you look at trusts owned by annuities can be subject to capital gains taxes and a 10% additional tax. The reason I4Life can be used is because I4Life can be owned in a trust, and it can offer that tax-advantaged income and wealth transfer strategy. And the reason it can do that is it solves that common non-natural owner problem with trust. Since I4Life is recognized by the IRS as an immediate annuity, it benefits from the exception of the taxes on the annual gains of 10% on the additional tax on the withdrawals. The reason, again, is I4Life in the IRS's eyes is considered an immediate annuity because the income comes out in systematic periodic payments, and so it gets taxed that way. It doesn't get taxed as LIFO like it would on a deferred annuity. Income for someone who isn't a spouse. Again, the reason we can do what we can do is because it falls under a different set of rules. So the I4Life can be used, again, for maybe a client of yours that got divorced and now has a partner, but they never got married. This can be utilized for that type of a client. It can be utilized for same-sex couple, same-sex marriage. It could be two sisters that live together. It could be two business owners. It doesn't matter. What I'm trying to say is this is something that can give you another joint income strategy for someone that isn't a spouse. And 1035 exchange by beneficiary. Until recently, if you inherited a non-qualified annuity, your options were pretty limited. In fact, most of the time, you could do a lump sum of 5 years or a non-qualified stretch. Now, the numbers are around that only about 50 to 55% of insurance companies offer any type of a non-qualified stretch option. So a lot of the times, it's a 50-50 shot that you might that beneficiary might even have the option to do that. But recently, because of our private letter with the IRS, it opened the doors for us to do what's called a post-death 1035 exchange to move an inherited non-qualified annuity to another carrier without a tax consequence. And the reason we can do that is because I4Life can be used in this circumstance to provide that tax-advantaged income, because it's going to, so the way this is going to work is, if the insurance company that the contract is currently in now, let's just say it's company XYZ, and they offer a post-death 1035 exchange, which a lot of them will do. We can move that contract over from where it is over to Lincoln with one of our index annuities with I4Life, and now the income can come out with an exclusion ratio and the client can get lifetime income. Versus if they did a non-qualified stretch, which of course would have been the best option over there if they didn't do the lump sum and the 5-year payout, is that the income is going to come out LIFO, and it's only based on your life expectancy. So this is another way where they can reposition that asset into something that's going to give them more tax-efficient income than the other way around. And then what I also wanted to
that's available on most of your contracts, is it not? The I4Life, is that available on most of the indexed annuities?
It is. Yeah, it is. I would say, like, what I would say is, let me just bring this up real quick. So if you look at most contracts out there, if you look at most contracts out there, most contracts out there are, you know, when I say contracts, most insurance companies like the VA companies and a lot of the more, the companies that do a lot of different variations of annuities, VA, index, fixed, most of the time they can do a post-death 1035 exchange, but there are going to be circumstances where you're going to see a carrier that won't do it or can't do it. Mm-hmm. But in terms of the amount of annuities at Lincoln that can offer the I4Life, it's almost available on almost all of our contracts, with an exception some of our shorter term contracts that are 5 or 6 years.
Sure.
But I'd say the number one product that we have that most people utilize with I4Life is the OptiBlend 7 and the OptiBlend 10.
Okay.
And the reason people tend to use that contract is because that contract not only has great pricing with the caps, has a very competitive volatility control index that's uncapped with a spread that's really low compared to the industry average, and also now has a par strategy as well. So it kind of has everything in it that you want. So if you look at it from a perspective of, hey, if an insurance company has a really good payout on their income rider, there's usually a cost to that. And the cost to that is usually really low caps, really high spreads, not a lot of account value opportunity for the growth. Whereas Lincoln, you can choose the best accumulation product and you can add, one of our income riders to it. With I4Life, it would be something you would add a contract issue. And I4Life is an income strategy that's for income for now. So it's going to be for someone who needs income now. It would not be for someone who needs income down the road. So this is currently the way it's currently constructed. It's an income now solution, but really what you're going to be looking for is when you go through your book of business, look for old non-qualified annuities that have a lot of gain in them or been in deferral for a long, long time. Because really, if you think about it, once those clients eventually start taking income, it's going to come out the worst way possible, which is LIFO, where you can change that and now have a more tax efficient income strategy that can pull out the income with an exclusion ratio and actually provide more net check to your clients while still maintaining control and flexibility of the asset. And that's really where I think the biggest opportunities are going to be there. And then the other thing is with I4Life, not only is it a great a distribution tool, but if you've also got clients in your book of business that maybe have old non-qualified annuities, and let's just say they're in their 70s, maybe 80s, and the purpose of that asset was to take income off of these annuities, but now they're in retirement. They've been in retirement for a long time. They've never actually utilized these annuities for income. So really, it's just going to go on to the next generation. Another thing you want to keep in the back of your mind is what's called a gifting strategy with I4Life. It's a strategy that's going to allow that owner annuitant of that contract to be able to get it to the next generation without a taxable event. And you can only do that with I4Life. Now, there's a couple different brochures that can walk you through some of the different strategies that we talked about. And that's something that's very unique to I4Life and Lincoln. It's only something you can do with Lincoln. So that post-death 1035 exchange opportunity is one, and then that gifting strategy would be another one. And lastly, when it all comes down to, cost and benefit to the client. The benefit to the client is going to be is that they can now take an old non-qualified annuity or cash value life insurance policy, put it into a Lincoln annuity with I4Life, have the income come out with an exclusion ratio so the income comes out more tax efficiently. And then from a cost perspective, it's only 95 basis points all in for the cost for the rider. So there's no other expenses because it is on an indexed annuity chassis. So with that, I'm going to throw it back to Matt.
I appreciate that. And then the question that came up was on the I4Life, if someone passes away and you say the client can take out their principal out in a lump sum, and then the interest portion, do they take that out for the duration of the contract that's left in the contract, or can they take that out based on the life expectancy?
They're going to take it out for the remaining payout years that are left in the contract, because there's not to get into the weeds too much, but it would just be for a set amount of years that are left on the payout schedule.
Okay, so I4Life, that's a lifetime payment to the client, correct?
Correct.
So
and you can do single or you can do joint. So
right.
You can't do a single or joint payout. Correct.
Right. So on the beneficiary side, is that based on the contract that was purchased, and then how many years are left on the surrender charge on that? Is that how that works?
What's going to happen is, yes, what's going to happen is when the annuitant passes, the owner, then of course, because it's annuitant driven like a SPIA would be,
right.
When the death benefit's triggered, the beneficiary then have the option to take a lump sum. They can take out the cost basis and stretch out the gain, or, they have various different options. But the reason I pointed out the one where the client or the beneficiary can take out the cost basis and stretch out the gain is because that's a very, very unique strategy that you really can't do with anything else that's out there.
Yeah, it's very, very strong. That's for sure. And then on the I4Life, how soon can they start those? Did they start them right away, or did they delay them for a while? How's that work?
They have to take, so just like a SPIA, they have to take income within 12 months.
Okay. So basically they take it out within 12 months, and then the client's going to start getting those payments. And then when you gift that, does it gift at that point the same amounts paid to the new individual, or do they reevaluate it and then pay it out by the new individual's age?
So the best way to explain the gifting strategy is usually in a gifting strategy situation, this is going to be for someone who's, let's say older, that doesn't really need the income, but they really just want to get it to their son. So the way this would really work kind of make it basic, but let's just say the client's got a $500,000 variable annuity with company XYZ, and $250,000 is cost basis, $250,000 is gain. This is a contract that's been in deferral for 20 years. They've never actually used income. There's no income rider on it, just straight accumulation.
Right.
The way we would construct that, or that strategy would be, is that we know that we want to get it to the son. The father says, listen, I'm 81 years old. I don't need this money. I want to get it to the next generation. The way we would structure this is we would 1035 it over to Lincoln as a like-to-like transfer. And with the application, everything, we're going to submit a change of annuitant, change of ownership form right after the application. So when the contract comes over and gets issued, we're going to make the son the annuitant on the contract, so it's going to be driven off his age. The father is still the owner of the contract. All he has to take is at least one payment to take receivership of the contract. And at that point, we can switch ownership to the son, where he's the owner and the annuitant of the contract. He gets income for life, of course, with an exclusion ratio versus it coming out LIFO. And then the father then reports that against his lifetime gift allowance at present value. Right.
And then the payout, it would be based on the person that was gifted the money. Yeah, the son.
Correct.
And then the basis would stay the same, so it would not have a step up. It would be at the same percentages as when it was moved over. Correct?
Correct. It's just the difference is going to be is we're going to make the son the annuitant, so the income is driven off his age from the beginning.
Right. And then it'll pay out for that much longer. So the parent has to take one payment based on their age. It gets gifted to the kid, and then the kid starts taking it based on their age.
Yeah, the best way to look at this is once it comes to Lincoln, obviously we do it as a like-to-like transfer because it's a 1035 exchange. But once it comes to Lincoln, the father at least needs to take at least just one payment,
right,
just to take receivership of the contract. And then what's going to happen is because the distribution phase has started, we're not gifting anything of value in that sense. We're really just transferring income over to the son because we're not changing ownership during the accumulation phase.
Mm-hmm. Okay.
And then real quickly on the Postdeath 1035 exchange, the idea there would be is, so the gifting strategy would be great for a client that's alive now that wants to do this wealth transfer now while they're alive. The Postdeath 1035 exchange strategy would be for that client that recently died in your book of business and they have a significant non-qualified annuity. The beneficiary, let's say, is the son. He's like, okay, so what are my options? I can do a lump sum. I can do 5 years. I can do a non-qualified stretch. So if he's smart, he does a non-qualified stretch. But the nice thing about a non-qualified stretch is we know as you stretch out the taxes. The downside of it's going to be is it comes out last in, first out, LIFO, and it comes out based on your life expectancy. So what we could do, if that initiating carrier with where the annuity is now will allow a post-death 1035 exchange, we can move that money from that carrier to Lincoln with I4Life, and now the income can come out with an exclusion ratio, and that beneficiary client can now get income that's going to come out tax efficiently. Now, there's two things that have to happen. One, which is the most important, the company that currently has the annuity, let's say it's company XYZ, and they say, yes, we'll do a post-death 1035 exchange. If they're willing to do it, we're like 80% of the way there, because the carrier that says no, then obviously we can't do it. But if they say yes, yeah, we can do that, they're going to want to do that pretty quickly, because once it comes over to Lincoln, we establish the new contract for the beneficiary, now new owner, annuitant of his own contract over here, is the income has to come out within 12 months of the original owner's death. So it's something that we have to do pretty quickly to follow within the parameters of the strategy in the IRS.
Good. Well, appreciate that. And I know if people do have interest in the I4Life. We're more than happy to do any proposals that need to be looked at, get anything done. If we have any specific questions, I can always call up a marketing individual at Lincoln or Craig himself, get the answers on those. I know we had a good group of people on today, so if you do have any further questions on this, you can be sure to give me a call. I'll be glad to get those answers. Anything that I'm not fully aware of, I can go ahead and call Lincoln Financial, get the answer for you here shortly after your phone call and get that taken care of. Again, this is Matt Tour. I'm of Insurance Agency Marketing. Our toll-free number is 800-255-5055. Just ask for Matt. I'd be glad to get that taken care of for you. Appreciate everyone's time this morning. I try to keep these under 45 minutes, so we're kind of at that limit right now. Sorry we got a little bit of a late start this morning. Had a little technical difficulties. Had to get that taken care of before we get started. Appreciate your time this morning, Craig. Anything you want to wrap up with this morning?
Yeah, just one thing. I did send a care package email to you, Matt, that if you can forward out to the attendees, it's just going to more or less give them a couple quote samples that they can look at, as well as some of the different sales materials on what we discussed, as well as the link to the annuity resource guide. So if they want to get I4Life pieces and download them, and other links to the rate sheets and stuff, so they can just see the entire Lincoln product portfolio all in one email.
Good. And I know I'll be contacting everyone that did attend today. Also contact the non-attendees. I'll go ahead and forward that to everyone that signed up for the meeting this morning and make sure everybody has that in their hands. And we look forward to helping you out with some business out there in the field. And if you have some questions on the I4Life, I know it's kind of an unusual new item that a lot of people are not fully aware of. So it's really a great way for clients to save money on taxes, a great way for clients to really be able to move money on to the next generation and doing it in an efficient way, and also save their beneficiaries on the upfront taxes on their end. So great combination there. Otherwise, everyone have a great week. Have a happy Easter this weekend. Appreciate you everyone spending their time here on a Wednesday morning with us. Thanks for your time, Craig. Appreciate you joining us here today. And otherwise, everyone have an outstanding week. I'll be following with a phone call to everyone that did attend today, and we'll move forward from there. Otherwise, everyone have a great week, and we'll talk to you soon. Bye now.